Good morning, yeah. Morning, everybody. Ohio. What's up? Yama. Namaste. Salam, my good friend. Morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. What is it? On Borda? What's Borda? Where's that from? Welsh, no kidding. Yeah, I got a little Welsh in me somewhere. Borda, huh? Cool. Yeah, I was actually speaking about the Welsh lately. It sounds like a joke, right? Hey, speaking about the Welsh, a funny thing happened to me on the way to Wales. No, okay, so history of Wales, let's say the general history, is it mostly mining? I was I was saying to my father, it was like what, coal mine and copper mines, right? What, fishing, seaman, coal mining, sheep. All right, there you go. Yes. So I've heard stories of like there were so many people named like I don't know, like Ivor Jones, that you'd have to be like Ivor Seawall Jones. Which Ivor Jones are you? Oh, I live down by the seawall. Oh, good, good. So, anyways, very interesting stuff. If I'm ever in Wales, I'll ring you up. I'm assuming you're Welsh. Oh yes, the movie up here is Trading Places. It's been a really good 36 hours of trading, huh? It's like redonkulous, raining pips, drowning in pips. Listen to me, man. It's 7:30 in the morning. I'm ready to go to bed. So, anyways, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. You may lose money. Don't risk your rent money or your medicine money, eh? Hello, good morning. My name is Wayne. How are you? Comment allez-vous? Oh no, who's that? Um, it's like Brazilian. Yen- Sorry, guys, I have to sleep. My name is Wayne McDonell, Chief FX Market Strategist for TradersWay.com. Hey, it's an ECN. Lovely little place. You should come and visit. We have Forex over here and some energy over there. Metals, we got some metals. Nice little indices. A very good price for you. We do these strategy sessions every 7:30 in the morning, Monday through Thursday, here at Forex.Today. What day of the week is it? It's a Wednesday. Well, inventory day. And every Friday at fxstreet.com, where I am Forex Speaker of the Year. Hoo-ha! How nice is that? So thank you for your loyalty and all that kind of stuff. Love it for being on my team. You give me the strength to get out of bed when I haven't slept enough. It's Scalper Wednesday. Yeah, if we have the volatility, maybe. Maybe that's all I got today. Maybe we'll just scalp. That's the easiest thing to do. All right. The software's not loading. Nice. After all of this. Come on, dude. Oh, there it is. This is where we left off. WTI. Remember our little buy zone? Thought it'd come down to what? 35? Well, it came down to 36 and then stopped. All right. Well, sorry. I said it would drop $7 and only dropped $6. All right. So my bad. But there's the pattern. Coolio, huh? Hallelujah. Isn't that nice stuff? That's really neat, huh? Took days to get down there. So that's WTI, West Texas Intermediate. It's pretty good stuff. You like it. And have you noticed that the correlation between oil and the stock market have broken? I really like that because remember I said when oil went up and down, it actually at that time had nothing to do with true fundamentals, right? That it was all emotion. And now the correlation's broken because now we're more worried about, okay, the Fed's not going to raise interest rates. Oil's cheap. That is actually a good thing because the crash has fallen. You know what I mean? See, what was dragging it down was the fact that it was crashing. But now that we have a floor, we're like, hey, you know what? Cheap oil is actually pretty good for some people, like most people, right? And then we're like, oh, the Fed's backing off. They're, hiking rates. So do you guys know what the Goldilocks economy is? It's perfect. It's the perfect little sleeper economy. Okay, so Goldilocks is the story where she's walking through the forest and um, she comes to an empty cabin, right? And she goes inside and there's a table, three chairs, three bowls of porridge, a little one, a medium one, and a big one, and right, the big one was way too hot. And the medium one is way too cold. Oh, but the little baby one, oh, it's just perfect. And the seat is just her height, and the table is just her height. Great. And after finally eating this big old bowl, then she goes upstairs, and there's three beds. A big one, oh, the big one's too soft. The medium one, oh, it's too hard. And the small baby one is just perfect for her, right? This kind of stuff. Well, the Goldilocks economy. So, by the way, the person trying all these things is Goldilocks. Sorry. Uh, so, anyways, Goldilocks economy is where things are good, things are humming along, like somebody said yesterday. Who was it? Was it a Fed person? No, it wasn't. Was it? Oh, it was ISM, right? So the ISM said, "Oh, okay, the economy's humming along, but not fast enough to warrant raising interest rates because it's just not, but it's not expanding that fast, but it's also not so slow that it needs some sort of stimulus either. You know what I mean? So interest rates are low, and there's no reason to raise them, and there's no reason to lower them. Like there's no trouble. We shouldn't be freaking out. The stock market's not going to crash. But there's no reason to raise interest rates either, so it's just going to keep going. It's just right, just perfect. So, anyways, that's really what's driving things these days, which is pretty good. Now, speaking about gold, you guys remember drawing this little channel? How neat is that, isn't it? Isn't it neat? It was one of these required to drop. I think it was this green candle required to drop, so we drew the channel. Okay, sure enough. So it was down one day, sideways, down two more days, sideways, down. Cool. Okay. So anyways, so the stock market is concerned about other things. Okay. Now, are you a buyer of gold? There are some areas in here that you should be interested in. if you're a bull, right? I didn't quite get that. There we go. Maybe in here, right? But what would you do if you were you, right? If you were a bull, the conditions are correct. Okay, you see this? So market conditions are correct to look for a bullish move. Okay, we're above support. Oscillator's cycling up. 55 is probably in control. So if you were buying, you were probably thinking this might go up to 1300 and then probably wimp out. Okay, so buy it around 12, get out around 13. Yeah, I know it's only $100, but you know, don't be Bill Gates, right? He won't lean over to pick up $100 bill because it's not worth his time. Okay, so that's gold, that's oil. Everything seems to be right as rain. Okay, so maybe a little dipsy do down, and then maybe if you were thinking about buying it, I'm not really a buyer of gold, but doesn't mean you're not, right? By the way, Tyler, are you in the room? Probably not. It's pretty early for you. I got an email from Tyler. I mentored him 3 months ago. He got his biggest winning day yesterday on the British pound. A combined total of at least at the last I heard from him, combined total of 2,500 pips for the day. Bravo, muchacho, muy bien. Good job, buddy. Yeah. Yeah, actually, it was appropriate because I taught him how to do it, and he pyramided it. So by the end of the day, he must have had about 25 trades open, all pound dollar, every single one of them at break even. And he was very, very happy. So, anyways, there's a big email. He's very happy and very thrilled. And I guess, anyways, let me get that again later. Okay. Hallelujah. Right? The first time you always remember, right? Oh, since when? Well, I think it was 3 months ago, Miles. He doubled his account when I mentored him. All right. Let me go back. Did that just not work out, that other one? Let's do it hourly. I saw some old analysis there. Oh, that worked out perfect. I thought I saw another one in there. Oh, it's here. I see. Look at that one. Down, up, down. All right. So Nikkei. Everyone's freaking out, right? End of the world for the Japanese stock market. What would you do if you were smarter than everybody else, and maybe even better looking than everybody else? When there's blood on the street, you have cash in hand, right? Yeah. The major story. I guess I have a couple of personal stories of like that during the financial crisis. I bought my car, people know this. I don't have to go into it, but it was worth a lot of money. It, it was a fairly nice AMG 55 convertible worth a fair amount of money. And yeah, no one could get credit, and the car dealer was going out of business. No one was buying new cars during the financial crisis, and this was the worst when like we literally thought capitalism was going to end. And he has this very expensive car, and he's selling everything he can so he can make his house payments because everyone it was that at that time when everyone was losing their house and stuff like that. And he had this AMG 55, beautiful convertible, just a gorgeous car. And he's like, I've been trying to sell it, and he's like, 6 people have shown up, and uh, they want to buy it. But they don't have the cash, so they go to the bank. And the bank's like, "Are you crazy?" Right? Like there was no credit, absolutely no credit. So I'm like, "Oh well, yeah, I'll give you $25,000 right now." And he's like, "It's a $70,000 car." I'm like, "Yeah, well, it's $25,000. You know, which one do you want? You want to eat a $70,000 car for dinner? Or do you want $25,000 cash so you can pay your mortgage?" Rum, rum. That's how it works. Because that was the best deal by far. I basically bailed the guy out. Another funny story was my current house where when I moved to the town, I thought, no, that's a nice house. That's where I want to live. But I bought somewhere else because I knew the market was going to crash. So I'm like, well, you don't buy high, right? So I buy in a different part of town. Anyway, so this house comes down, comes down during the crash. And I put in an offer at the bank, and I'm like, I'll give you this much. And they're like, that is insulting. You're a horrible human being. You're worse than mud. I'm like, it was just an offer, right? It's just an offer. But, come on, right? People were lowballing. It was just because you didn't know you could buy it and you're going to lose 10% in a month, right? Do you remember those days? So you had to lowball it because by the time the deal went through, it already lost more money, right? So you had to do that. So anyways, so they said no. I come back a year later, offered 20% less. And they're like, yes. Yeah. But, but most people couldn't just like roll out in the street and get a mortgage, right? So anyways, what do you do when there's blood on the street? Well, you shouldn't be holding a bunch of illiquid assets, right? Sure what I'm talking about? You should have some cash, dude. And I'm thinking maybe we have blood on the street here on the yens. You see this? Right? We got some big pivots going on here. Weekly, and I think these are monthly. What? Monthly S2, monthly S1, you see? So there's two things going on. The low of the month is supposed to be right between these two green lines that I've highlighted. The low of the week is right at the bottom where we are. And if you back out, we're kind of near the bottom of a range, right? Right? Should we be looking at this as support? You know, yeah, maybe, I think, right? So we just got to be careful. That's all. We should, pay attention. What if after buying these yens, um, what if after buying these yens, things change, right? Remember, I was saying that a lot of the yen strength right now might just because it's fiscal new year, and that a lot of, you know, getting out, a lot of profit taking occurred in the new fiscal year. Okay, and then I look at USD yen, and it's the same price as yesterday. Wasn't it 110.40 yesterday? But I made like, I don't know, I have some pound, right? I have some pound trades that are up like 400 pips, just the one trade, right? Like, well, made like 400 pips over there and nothing happened, right? 400 pips on the left, nothing on the right. Just amazing. So something's going on, right? So we can burn through some of this, but I wonder if we're going to stabilize, right? At some point, you got to realize that, even if you've had 6 trades in a row, you might not want to make the 7th one. Got to pay attention here. Now, this is a different setup. This looks like you would sell it hard. Okay? Simple technical analysis. That's old support. Drag it across. That's sort of the sell zone. And here we're between the 21, right? So anyways, when I do that, that's called price action. If I'm doing this other thing here, I'm using the 2155 as a dynamic area of resistance. So that's a different kind of setup. So a bear would be selling that. You could use oscillators for overbought and oversold conditions, but either way, the target on this one is down. Okay. I'd say, why not to the monthly and weekly cluster? What do you think? I should have my drawing tool. Let me get my drawing tool. Come on, baby. Draw an arrow for me. All right. So what we're looking at is in the past, this would have been down. Retracement, down, retracement, right? Down, retracement, down. Remember the pivot point theory. If you're trading weekly pivots, somewhere between the weekly central and the weekly M3, which is this area, if that holds as resistance, this area here is support. That's what you'd be thinking on Monday. Okay? If you're a buyer of this and you bought low like this little dip, then you're thinking up here. Clearly, you were wrong. Okay? So the actual target for whoever sold here is right here. Yep. This is the European stock market. This is the German stock market. This is the UK stock market. Right? Yeah, Ryan brings out, about the monthlies and the weeklies. Well, when it's the first week, very often they're going to overlap the first month. So don't make too big of a deal of it. Okay. And then I just want to skip and do the S&P 500 because I'm assuming you've done a lot of this analysis already, so I'm just rehashing the basics. Hello, 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 hello. All right, so if you want this to go up, it kind of needs to do it soon, doesn't it? Can't you see that I am not afraid? And then some are going to worry about like a head and shoulders type deal. Okay. If it starts going lower than this, we got a real problem. Houston, we have a problem. Because if it's going down and up, like, okay, most people make money on the way up. That's fine. But what if it starts doing this? Real problem. Yeah. Because that starts bringing this down. If you have an inside week, which means non-trending market, if weekly S1 is your support, it kind of seems like it's the support. What's the resistance? R1. That almost seems impossible, doesn't it? So it's going to go then what? Up to here, then down, then here, then probably down twice, and then break out. Psh, tough week, man. I'm thinking maybe this whole stock market just moved sideways for 2 weeks, right? And we get a new inside week next week, and all it does is the R gets closer. Okay, beast. So where we were in somewhere yesterday. Can't remember. So I stayed in the trade, as you can see. In at 59, it's 55 right now. So 400 something pips. Pretty good day. Now coming into these monthlies, bit of a concern in here, huh? But nothing really to add. You can see that it came down and it played the weeklies, didn't it? Scared some people out. Down in here, this is a big deal, isn't it? Next level's down here. So along the way, you're going to get pullbacks, and you need to decide, do you cash out? If you cash out, you need to cash out. You're in the spot to cash out. If you want to stay in, then it's most likely because some people are going to cash out, it'll come back here, which is almost 100 pips, right? And then it's going to come down like this, right? Is the idea. Okay. Well, it's through 80. Typically, if it gets through 80, I hold till 50. Cool. So we'll let that one work itself out. Or it says that we're at daily support. Well, if I'm swing trading, I typically don't look at pivots, daily pivots, because I've made decisions on higher time frames, right? And this was a big, what happens if we break lower than this, question mark. And yeah, kind of looks like we're trying to break, huh? Wow, wowzers. Okay, now oscillators is up here that we're going to look for reasons to buy this today. That's what the oscillator says. So on a smaller time frame, if that's true, okay, you already have this locked and loaded like this. Am I right? Okay, so let's go through the pieces here. On the 4 hour, you see that. It gives you permission if you want to buy. Right? Or Oren is right though. You have to have the support first. So we go back to what we did, I think it was yesterday, and I count this area here from this spot. Let me get rid of MACD. In fact, let me just kill MACD. No, don't do it. Boom. Okay. So I'm looking at this shoulder. Oh, come on, drawing tool. How many times do I have to click it? All right, let's do it again. Shoulder, neck, right, neck. Okay. We're kind of in there at 83. So we're at 83.22. Okay. So I think it hit 83 and went up like 50 pips, guys. So we're kind of there with an oscillator like this. If you happen to want to buy the Aussie, or if you happen to want to sell the yen, one of the two. Right, Miles says, but it's trending. Didn't you say that you shouldn't rely on an oscillator? I'm not relying on an oscillator. It's the support. That's the whole point I'm trying to make. If you are a bull, now you might not be a bull, and you say, Wayne, that's crazy. Well, it's crazy because you're not a bull. Okay? If you were looking to buy the Aussie anyways, this is clearly a level support in market conditions which are conducive for buying. So now, if you believe all of that, okay, we're at the point. So now you drop into a smaller time frame. 15-minute wants to go for a ride north too, right? Right? The 15-minute oscillator's not saying no. So now maybe you play 5-minute cycles, or you look for little 5-minute breaks. Okay? But remember, the actual dip was a little lower than this. So truly, your buy zone is going to be about here. Right? Well, what have I taught you? Your buy zone when you're playing the psych level is really near 0, all the way down to 80, which is here. So this whole area, what we're talking about, is there. And why is that? 85% of stops are all within 30 pips. It might be 35 pips. Okay. So if you bought it at 20 and your stop is at 70, and you're a bull and you believe this is support, you're probably going to be safe. Okay. Now the interesting thing is if you bought it at 90, your stop's still going to be at 70. Same trade, different price, different risk. Same trade. Okay? So that's how you drill down from a 4-hour to a 1-hour to a 15 to a 5. Most important thing, your bias is bullish and you're at support. Now if you're bearish, well, that's easy, right? Sell high, dude. But you probably already sold it high. Okay? Okay? You've already played this. If you were right, if you were a bear and you wanted to sell this, I couldn't imagine you not trading this. I just couldn't imagine a world where you tell me straight face you're a bear, you're at 83.50, right? 1 hour 21 with an overbought oscillator, and you didn't trade it? No. I just wouldn't get it. Be like a funny joke. What do you mean? I don't get it. That pound yen just made another 10 pips. It's going down more. It just won't stop. Yeah, man. Cool. Hopefully we don't give it all back, huh? So that's Aussie. How do you feel about Kiwis? Well, Miles, if I buy it, if 80 breaks, I tend to believe it's going to go to 50. So, yeah, if 80 breaks, I probably just bail. Do you guys remember doing this? It's amazing, huh? I think this was the comment where someone was talking about buying the Kiwi yen because it had been up for like 27 days in a row or something. And I crushed that that happy spirit. I destroyed it because it's not true, is it? If it's up 27 days in a row, someone's going to take profit and the whole thing's going to come down. Okay? So anyways, wow, we're way down here. Look how it came to the pip, guys. To the pip. Stopped. Man, oh man. So, I mean, this is very interesting because we think ahead, right? We're not thinking about today or even tomorrow. But what about next week? Am I going to be long Kiwi yen again? Could be a rabbit, could be. This is interesting stuff. Love it. Now, bear in mind, a couple of days ago when the USD yen was at 113, I said, I think it's going to come back down to 110, and then I'm going to consider buying it. Well, we've had all these pullbacks in all yen pairs. Oh, sorry. Stretch, stretch, stretch. Okay, we've had all these pullbacks in the yen. The Nikkei has crashed, but we're at a monthly and weekly support cluster. Wouldn't it be interesting if 3 days from now we're up a couple hundred pips, but we're long yen pairs, not short yen pairs? So, it's like you can't be complacent in this world, right? If I take profit on my pound yen, the market's going to reverse, apparently, right? So yeah, so are we at support or resistance? It's really easy stuff. Chasing prices for fools, right? The yen pairs have dropped. This pound yen's dropped 700 pips in just the last day and a half. Doesn't mean it's going to drop another 700 pips in the next day and a half, right? Things come to an end. Where would it come to an end? Where could it possibly come to an end? Well, maybe in here. I'm not saying bail on it yet. The daily doesn't say bail on it. But that's the right place, right? So am I aggressively adding to new positions here? No. Okay. So what if you observed something like this? Cool. Cream, did you pick it up? You had an order sitting there at 110? Holy smokes. Well, high five. High five, Cream. Yeah. Oh, you too, Artem? Holy smokes, eh? Fastest 40 pips you made on USD yen in probably a long time, huh? Cool. Just bada bing, bada boom. Cool. Isn't it funny to have talked about it 3 days in advance when everybody was a bull? Remember that? Everybody was a bull. Everybody was a bull. I like the way you trade. I was reading Barron's magazine. You know what the trade of the month was? It was one of the writers making a comment earlier in the year where Time magazine made Angela Merkel person of the year, and some other magazine was touting the end of Brazil. right? Because it was the darling during the commodity boom, but now it's bust and it's corrupt, and the politicians are being thrown in jail and all this kind of stuff. So the two major magazine articles, Time and I don't know, Life or whatever it was, and he said, really? He says, by the time the magazines have written about it, it's already priced in. So he said, all right, so Angela Merkel is person of the year. All right, that's got to be horrible for Europe. So he was like, sell euro, right? Or European stocks or whatever your business was, right? Sell Europe. And then he says, well, everybody knows about Brazilian problems and stuff like that. So um, whatever market you're in, buy Brazil. And it turned out to be like the best trade of the quarter, where, Europe came crashing down. And yes, Brazil has its problems, but all of the problems were priced in. So now you could get things cheap because of the problems. It's sort of like buying oil and it goes from 25 to 40, and you're like, what's the big deal? Well, statistically, percentage wise, that's huge, right? Isn't it funny? So once again, it shows you, you can't follow the herds. That's how you stay impoverished, right? So I don't know. This doesn't necessarily look like it's popping up, but you could look for psych levels, but nice round numbers, and play it on a 15-minute chart. 15-minute says yes. Okay, this says up for 2 hours. Okay, and the way that it's playing out, guys, if you happen to be a bull, this is not a very good bull setup. You're counter trending, but that's exactly what you'd be looking for. A rally from 50 to almost a 50 again, so almost a 100 pip rally, and a retracement all the way back. Now you got a Stokes kicker on a 15. Okay, that's okay. Okay. You see? I'm not saying that's beautiful. You're beautiful. I'm not. You're beautiful, right? But the 15-minute wants to go up, and if it was up for 2 hours from here, what do you think this oscillator is going to look like on the hourly chart? Right? And it's all yellow. I wrote a song. I want to call it blue, but I called it yellow. No, Mike, oscillators are just overbought and oversold conditions. So if you're playing this as support and you were worried about this downward move was going to make a lower low, now look, let's reverse this. If you're a bear, you sold it near the 21. Easy. You could do that with in your sleep, right? But if you're a bull, you're saying, I hope it doesn't make a lower low. I hope it doesn't make a lower low. I hope it doesn't make a lower low. I hope it doesn't make a lower low, right? And all of a sudden, it you know it turns over on your 786. Okay. Now, if you did sell here, and obviously it wouldn't have been a perfect entry. So let's say you're there and price comes up, you're going to get knocked out because you sold the 21 and definitely 100% expected a lower low. You just absolutely, right? Absolutely, totally, unequivocally expected a lower low. So if it comes up, makes a higher high, you are oot, as they say in Canada. Get oot, eh? Yeah, don't you know? So all of a sudden these bulls get in, and then these bears get out, and the slingshots. Yeah, right on, Kareem. I hope you have a fantastic year, Kareem. Miles says, "Yeah, you sold at 21." Yeah. If I'm a bear with this type of move, absolutely. Yep. Yep. Okay, and this goes back to the idea of the trend. Okay, it's not going to get overbought in a downtrend like this. It's just not. So one thing you'll see me do in certain situations like this is I'll put this on the 50 line, okay, and I'll say that's the new high zone, right? There's another way of doing it. I wrote a song. I wrote a song for you and called it blue. No, wait, it's yellow. What am I doing? Come on, I have to think out loud. Where's my levels? You can do it this way too. Boop, right? And you take the shot that way. But think of it this way. The oscillator is measuring price action, overbought and oversold conditions for price. Okay, is anybody buying it in any of this move? No, no. Don't be wishy-washy, Miles. No, absolutely, totally not. Not one idiot, Mike. Okay, okay. Down to the 21 sell. Down, back to the 21 sell, right? And you're just riding this like crazy. Hours and hours of just making pips. You're not even thinking long. It's impossible, right? And you would have sold this. It's just it. That's that. Well, you would have lost money. Well, so what? It's a big deal. I'd be more afraid of not trading the obvious than taking a loser, right? But the question is, will that continue? And I'm not so sure. That's why we're talking this, because I can't sell here anyways. So as the opposite of that is a potential bull, that would look very interesting to me. Right place, right time. And what it'll do is it'll squeeze people that should have gotten out of this trade. If they haven't gotten out already, they're going to be squeezed out of the trade. We're going to force them to make a decision. Another way of looking at it is that you're stop hunting. Okay. If you sold this 21, where did you actually pull the trigger? Probably here, right? So this is what I did before. So if you jammed your stop now, because as soon as you start to see this green candle, you're like, oh snap, well, I might not get my lower low, dude. So what do? You freak out and you jam your stop, right? There's stops here and there's stops here. Am I right? I mean, we don't know for sure, but where are the two places 80 or 90% of these stops are going to be. Okay? So it's going to go like this. Snap, drop, snap, right? Drop. That's how a bull would play it. Peter would wait for the candle to close. Okay. See, the opposite of that, Peter, is if you believe the 21 is resistance, sell it. You know, it'd be like if you believed it was resistance, I'd rather you sell it up here than wait for the next candle to close and now you're short here. Just different point of view. If I think that's resistance, I want to sell as close as that as possible. Yeah, sometimes you're wrong. It'll jump up and take you out, and you'll lose 25 pips quickly. That's pretty rare, though, really. Even if you're wrong, usually what it does is like actually what it did, right? Come down, it takes a while, and then maybe it knocks you out, right? So another way of looking at it, guys, if you are a bear, okay, you just drop below the psych level. Where's the sell zone for you now? 0, 0 to 20. Okay. And you're going to do a lower high move on these guys. Okay. And you're like, Wayne, you just convinced me to long. No, I didn't. Said if you were a bull and you've been waiting to buy. There's a difference. So I can't tell you whether to be a bull or a bear. Okay. If you're a bear, why would you not sell it between 0, 0, and 20? Right? See, again, where the money's made is your strategy, your plan, your bias. What do you want to do with this? Can't chase price all the time. So what do you want to do here? Notice we're in front of the candles, not behind. Okay? We made it as far as 95. Are you going to sell it near 0, 0? Right? Now you getting it? The 0020 applies only to psych levels. Yes. Yes. Only to psych levels. And when you're in a bearish move, okay, so we just did this, right? Right through the psych level. So you say, okay, we went through. Typically what I say is it goes down to 80, right? Well, I'm sorry, it came down to 76. Okay, back up to the psych level, which is here. And someone's going to sell it, right? Where's the, oops, come on, drawing tool. Where's the drawing tool? Or where's the stop? Where are the stops if someone sells it sort of here? Should probably get rid of that fib. That's confusing. Where are the stops going to be? Predict the future, guys. Oh, come on. There we go. Right? If that was your trade plan. I wrote a song. Wrote this song for you. And I called it blue. I changed it to yellow. Okay, so let's say this is your general trade plan. Easy peasy lemon squeezy, right? Okay. And it doesn't have to be right in there. I mean, that's even a little bit high, right? So I got to bring it more like, yeah, it's more like that. Okay, great. Where are the stops? Can't be 80, Horace. That would be bullish. Those would be bullish stops. The stops, there's going to be some just above the psych level. The next cluster is just above 20. Also, right? And if that happened, that pushes it bullish, and we make higher highs, and it goes up to the next level. That's what makes it go to the next level. Okay? No. So this is the zone. Okay? So if you're a bear, okay? If you're a bear, you're looking for, that would be the perfect move like this. And the stops are always going to be the same. Okay? And there's usually people start jumping back in usually even just a bit before 0, 0. So we got to about 95. That's usually good enough for a lot of people, depending on how aggressive the market is. But right now, I'm trying to point out that there's still nothing bullish about this. But if we break above this, then there's lots of bullish. Now, it doesn't start with people buying. It starts with people getting knocked out, per se. Because remember, if you're a bear and price goes above either of these lines, you get stopped out, which means your broker enters long positions to offset your short positions. This is why, we get situations where for 3 weeks the Euro USD goes up, but nobody's buying Euro. Say, what? Short covering. You guys remember that? We had like literally 3 weeks. Every week we'd look at them like, wow, Euro USD is up another 400 pips, but nobody's buying it. Crazy days, huh? Well, really, Miles, it comes down to you need to think about where you believe the stops are. If you are setting up a bullish trade plan, you should also look at it from the bear's point of view and say, all right, well, if I was a bear, where would I sell and where would I put my stops? It shouldn't be that complicated. We're all doing technical analysis, right? But maybe that's the difference between an experienced trader and a professional trader, if you will. A professional trader, before he pulls a trigger or before she pulls a trigger, contemplates both sides of the trade. Well, so I'm particularly talking about psych levels, right? But, you know, you should think about where the stops are on all trades. Why not? How nice is that, huh? And know the things we do. Momo. Wow, huh? How pretty is that chart? Well, I don't know what you mean, does that work? Does it work? Does what work? I'm just telling you, think about it. If you're setting up a bullish trade plan, great, nice. Where do you buy? What kind of conditions do you want as far as oscillators and moving averages? Great. What's your support? Fine. Nice. Where's your stop going to be? Okay, good, got it. Great. Now you have a trade plan. Now, one thing you can do before you jump in with 2 feet, think about it from the opposite point of view. All right, if I was a bear, what would I do? Well, you know you're not going to sell at support, so you have to sell at resistance. Well, where's that next resistance? What will they want the oscillator to look like? And then if they sold there, where would their stop be? Because if you, as a bull, you can drive it through that level, then you're going to hit their stops and go to the next level, and you just made huge cash. But right? There's no this 0.20. Well, don't get caught up on the 0.20. Don't paint yourself into corners with, rules. I hate rules. I'm an entrepreneur. I walk into a room and I say, "Where's your rules? I'm going to break your rules." I'm a rule breaker. Okay? No rules. Just think about where the stops are going to be. Think about the other person on the other side of your trade. Where are their weaknesses? That's what I'm talking about. If they shorted at 0.0 and all of a sudden we're at 25, they are freaking out. What do you do when you're down 25 pips on a spot trade? You're freaking out. You're like, "Oh my God, it just made a higher high and I'm a bear." You bail. Out, 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 right? And what does that mean? All these long positions start coming into the market to offset all the bears, and all of a sudden, boom, we're on our way to 50, and you just made 50 pips as a bull. There's a whole bunch of bears that just lost 25 or 30 or 40 or 50 pips, right? So there's no 80-20 stuff. There's no 0-0-20 stuff. Just think about the other person on the other side of the trade. Where are they going to enter? Because you should be able to figure that out. Where are they going to exit? You should be able to figure that out too. And when you can, then you start to qualify how good is this trade setup? How many bulls are really going to buy along with me? And will the bears resell and just wipe me out for break even? Or are they vulnerable on this one? Are they freaking out? What's going to get them out of that trade? See? And those are the things. So the other day I was talking about exiting a trade, 90 minutes early because the weather was nice in London? I'm thinking about the other person on the other side of the trade. I'm thinking they're sweating bullets, and they want to call it's the end of the week. I think it was the end of the month or something like that. And I'm like, it's a nice day in London. They just want to get out. They've had a profitable month. They don't want to screw it up. They don't want to sit around 2 more hours and then lose some money. They want to get out while the getting's good. It's a nice sunny day. They want to go to the pub. It's Friday. It's the end of the month. Let's celebrate. So I'm going to hunt their stops. I'm going to help them make their decision. Right? Yeah. Well, yeah. Yep. You're right, Mike. Absolutely. The market is people. Okay. Now, my university fellows will disagree with me. They think the market is a bunch of machines, and they were thinking that before there were even machines. Right? Efficient market hypotheses that everybody's logical? Are you crazy? Like, what idiot came up with that? I still can't fathom it. Really? So let's say 50 years ago, before computers, the market was rational? Really? All the time. There was no way you could beat the market because without taking additional risk. I'm just think that just can't be true. I just totally disagree with this stuff they're teaching university students. I'm just like, there's no way that's possible. It might have been more true 50 years ago, but it ain't true now. And the other one I think is funny. They're like, here's a model for you to figure out the value of a stock, how much you should pay for a stock. I'm like, oh, this is going to be good. And they bust out this huge long formula. Oh, well, what is the beta of the market? And, all right, so you calculate all this out. Turns out they think Apple computers, for example, is valued or should be worth the future value of all dividend payments. I'm like, what? Yes, Apple computers should be valued at the future the future value. So you have to do time value of money calculations of all the dividend payments. I'm like, there's not one person on the planet that bought Apple computer because of dividend payment cash flow discounted over a certain period of time. There's just not one person. They bought it because they're taking over the entire world and they make great products that everyone wants to buy and they keep piles of cash. They're buying it because they think the stock price is going to go up. Harvard is still, and I'm sure Yale is even worse, but they're still teaching that it should be based on, these stocks are based on the value of their dividend payments over time. I'm like, no, people buy stocks because they want the stock price to go up. Can you imagine, like, there's such a disconnect? No, you buy a stock because you think the stock price is going to go up. You buy a bond because it's going to make, coupon payments. Well, yeah, okay, discount that over cash flow, but no one buys a stock based on dividend cash flow. Now, maybe you have a part of your portfolio that does that for safety at certain times, but you're still not doing discounted cash flow or dividend payment analysis. But anyways, it's so funny. Yeah, well, they can shine my shoes, Mikey. All right. Boo, 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 boo. Hey. Hey, dude. Cool. So it dropped from 95 to 82, 80, 79. Coolio. Nice, huh? Buying falling companies too. That's called either value or distressed, but I don't know. Yeah, well, you got to do some reading, right? It's just we're going to have some very interesting reading. I believe I talked about it on Monday, and maybe even last week. But we need to figure out who's thinking what and why. And my guess is that we got Grandma Yellen and I don't know, one other dude that are uh, doves, and I think everyone is either neutral or bullish. And it's basically Grandma Yellen that's holding back the interest rate hikes. And then she wouldn't be so brave if she didn't have someone else kind of backing her up, like, yeah, yeah, Grandma, yeah, yeah, you tell them, Grandma, you're the boss, Grandma, right? So, is it Gamma? It's probably Gamma too, right? Gamma, Gamma Yellen. So, anyways, I think that's what's happening. If I were to guess, that it's Janet Yellen um, being the boss, and she's like, yeah, I hear everybody. You guys are neutral because for some reason, you're so pathetic you can't make a decision. Some of you guys are super hawks, and I get it. I see what you're looking at. I have the same concerns, you know, but I have some other concerns, and I'm the boss. I'm the chairperson of this whole organization. I sign your checks, Bubba. So I think it's too early, and that's that. Yellen knows best. That's funny. So yeah, I think that's where we are. I think that's where we are, and I'm very interested to see how much of that is going to be seen in the meeting minutes, right? And 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 I'm very interested in seeing if 10 years from now Janet Yellen is sitting on like the board of directors for like J.P. Morgan or Goldman Sachs. Who's benefiting from this? Yeah. So very interesting stuff. So an amazing day, guys. Amazing day. Just amazing day. Huge pips, guys, and doesn't mean it's going to last. So keep identifying support and resistance, and ask yourself: is this really what you want to do? Is this something that you thought about 2 days ago, 2 weeks ago, or are you just making it up on the fly right before you pull the trigger? Say, what was the plan? You know what I mean? Like, are you being manipulated by the market, or are you in control of your behavior? Who's in control? Are you boss? Sally, my plans are very, very, very straightforward. I usually know what I'm going to do 2, 3, 4, 5 months in advance, right? And they're fundamentally based. Okay. I like buying dollar. Okay. For example, just love it. So what do I do when the dollar's weak? Probably nothing. I could skip scalp, and I have some options available to me, but I don't have to trade it. I could just wait for bullishness because I enjoy buying US dollar. I think it has a great economy compared to everybody else. And I think even if we only raise once or twice this year, we're still raising interest rates. Who else is raising interest rates? Right? Well, okay, from the journal aspect of it, Sally, you'll need to buy my book because I 30% of the book is how to journal properly because most people don't even do that right. And I used to be a hardcore journaler and business planner and all that kind of stuff. Oh, sweet. Right on. Bring it to China. Bring it to Shenzhen. I'll sign it for you. I'll be there next week, I guess, right? So if you're in Shenzhen, bring your book. Um, so yeah, so who's in control? What's the plan? What's your bag, baby? You know, and that's a form of being cautious. That's a form of being risk averse. On the long run, you can't make money, or I wouldn't expect that you can consistently make money when your behavior is inconsistent. Um, yeah, I was at the Toronto show. I don't know, 4 years ago, maybe 3 years ago. I don't know. I think Toronto is the most expensive city in the world. It makes like Tokyo and Beijing and New York makes them look cheap. Yeah, Horace. Yeah, Horace is in Toronto too. You guys, you're all in the big TO. Ridiculous. Get in a cab and go somewhere. Buy a cigar and a drink. With a, it's going to cost you $100. Well, this was a few years ago, I guess, when the Canadian dollar was still quite strong. So I guess now that everything's half price again, maybe it's reasonable. No, I mean just no, no, Mike. So I'm there for this conference, and my mom comes to hear me speak. Because I get nervous when my mommy's not there. So, anyways, when we're done, I'm like, "Hey, mom, let's just jump in the cab." Someone told me about a nice bar on top of a hotel that has a big view of the park, and you can see downtown Toronto and the CN Tower. You can see it all from this big view. So let's go there, and I want to get a Cuban cigar. She's like, okay, sounds good. So we get in the cab, you know, it's just from downtown across this park, I think past the university, right? And you just get to this nice hotel, and on top of the hotel is a bar with a view and tables outside. Really nice. We get out of the cab, and he's like, "It's $50, eh?" Like, $50? It was only 12 blocks. So I'm like, whoa, wow, I got to take this cab back now? Holy smokes. So we go to the top of the bar, and we get a nice table outside, nice view. Sure enough, it's just what we wanted. Right? They come out, one cocktail for my mom, one cocktail for me, and I'm like, oh, I'd like a cigar. Oh, yes, sir. You know, so I grab a Monte number two, nice and easy, right? Great. Time to check out. You know, two cocktails and a cigar was like $130. I'm like, holy crap! Are you kidding me? And I got to go back downstairs and get in my $50 cab to go back to the hotel. Just like, holy crap! So yeah, you can keep Toronto, eh? Yeah, but I was with my mom, so I couldn't back out, right? Couldn't negotiate and look like a dimbo. So, anyways, yeah, holy smokes, man! Welcome to the big TO. So forget that. You can keep Toronto. It's yours. Go right. So, anyways, peace on earth. May the pips be with you. May your profits be above average. We'll meet up in New York City sometime, guys. You just go from Toronto to New York City. At least we can go to, at least New York's cheap. You can get a steak, a cigar, cab ride, all half price compared to Toronto. So today was a Wednesday, so remember we got oil inventories at 10:30. CAD's going to move a little bit, but remember we're teeing up the CAD for I think it's Friday, so pay attention to that. And I think we have a little bit of CAD news tomorrow as well. But so I'll be here every day. Every day I'll be here tomorrow, and then Friday I'll be at FX Street. So peace on earth, may the pips be with you, may your profits be above average. And of course, this video, like every day, will be uploaded to Forex.Today. Cheers.